We're in an interesting point now because so many dollars have been created that just about every asset class is at an all-time high. I mean, precious metals, real estate, stocks, bonds, pretty much everything is in a bull market. And so it can be confusing to say, like, is something going to continue to go up or not? I mean, it could be the case that real estate and the stock market goes up, but they just might not go up as much as something like gold or some other investments.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, we have a gold and honest money expert with us here, Alan Hibbard. Alan, it's great to have you on the show. You work with Mike Maloney. The site is goldsilver.com. You got a question for Alan or myself, shoot me an email, kl@kerrylutz.com. We'll get you an answer. So, Alan, where are we right now? We've seen gold and silver. Gold now trading at $32.50 an ounce, thereabouts. Silver over $2,400. What are these numbers telling you?
Yeah, well, basically, we're in a precious metals bull market. There's no question about it. So gold is moving up. Silver is moving up, like you said. Silver's up over 30% on the year already, and gold is up over 20% from its lows in February, I believe it was. So these are pretty strong moves. And this is part of what I would say is a big picture around inflation. So inflation is kind of the main story. Yes, we're getting a little bit of a reprieve in the United States. And yes, it's possible we get a rate cut or two or even three in the coming year. But really, we've created so many dollars over the past few decades. Eventually, they're going to come back home and they're going to show up in consumer prices. And investors of all shapes and sizes are going to move into gold and silver as they've been doing lately.
All right. So you don't think it's too late to get in on the party?
No, I don't think it's too late. Usually these big bull markets in precious metals are measured in years, or usually like a decade. If we look at the 1970s, there's basically 10 years of a really strong bull market in both metals. And it's looking like we're shaping up for another bull market of a similar size and scale. And we're only maybe a year or two into it. So I would say there's still a few years left.
All right, at least a few years. Hey, you have any feelings about Bitcoin and other so-called cryptocurrencies?
Yeah, I'm a big fan of Bitcoin. So my portfolio is basically gold, silver, and Bitcoin. And that's it, which is a bit extreme, but it's three kinds of money. And I'm a big fan of that right now. I personally don't like taking a lot of centralized risk, whether it's in companies or countries or currencies. So gold, silver, Bitcoin, those are money. And so I'm a big fan of those. However, most other cryptocurrencies, I'm generally not a fan of from an investment perspective because they're too idiosyncratic. You have to make too many specific bets on specific companies and technologies and their ability to market and execute. And that could make sense for some people, some investors, but it just doesn't make sense for me. So I like Bitcoin, but not really the others.
All right. So talking about gold and silver, mining stocks, they have been a little late to join the party. Usually they lead the party. What's your feeling there?
Yeah, well, I don't usually choose specific names, again, because of the idiosyncratic risk, and it would require me to do too much due diligence on specific companies and, management and the specific nuance that they're facing in individual countries and jurisdictions. And it's a little too granular for me specifically, but in general, you're right. Mining stocks have been lagging. And generally, if you hold stocks a long period of time, you're going to underperform the metal itself. So if you just hold gold or silver, you usually perform better than holding a mining stock for the same length of time. So mining stocks are more high risk, high reward. If you can get the timing right, you can obviously get way bigger returns, but there's a risk there. So we will see these mining stocks pick up. I'm not sure which ones. I'm not sure when. So I don't really want to touch any specifics on that one.
Okay. And all right. So is there any other investments that you see besides those three? I know you say you're invested gold, silver, Bitcoin, but what else if you're looking to branch out a little bit?
Yeah, well, eventually, I mean, I would love to be holding stocks, dividend paying stocks, real estate, cash flow real estate. That's ultimately what I want to hold. I think that would be more fun, more exciting. It would have better returns. But when I look at the stock market right now, it just feels a little overvalued. And I look at real estate, it feels the same way. So PE ratios are super high. Dividend yields are super low. So for me personally, it just doesn't seem that attractive. And I like to invest over the long term. I like to play these long cycles that take 10 years to play out or 20 years to play out. So as I look at something like the Dow Gold ratio, for example, that basically shows the flow of capital from the centralized portion of the economy, the Dow Jones, to the decentralized portion of the economy, gold, right? Where gold doesn't have a single issuer, it doesn't have a single management company, it doesn't have a single interest rate or anything like that. And so with the Dow Gold ratio, capital moves back and forth from decentralized to centralized, and it can take a decade or two or three to make one swing back and forth. So as I look at the Dow Gold ratio, it's particularly high, which means that the Dow Jones has been performing well in the recent past. However, looking forward, I'm expecting that ratio to come back down, which would suggest that gold would outperform the Dow in order for that to happen. So that's sort of my play now, is just wait for that ratio to revert. It could take another 10 years, could take 15 years. I'm just going to be patient. And when it reverts, that's what I'm planning anyways, to move most of my, my precious metals into stocks and just sort of buy an index and then wait, 20 years or 30 years in that position. So that's my strategy. I hope it works. We'll see.
All right. What about real estate? Because real estate's always marketed as a hedge against inflation. Obviously, the inflation isn't going away. It's not transitory. Now they're saying it's sticky. I would say semi-permanent. You got an opinion on that?
Yeah, so I'm certainly not a real estate expert. I like to stick to, precious metals and sound money fundamentals. But I can say about real estate that Robert Kiyosaki has a great quote on real estate. Someone once asked him, hey, is now a good time to get into real estate? And he said, it depends. Are you good at making money in real estate? So it's kind of like, it's not so much what the market is necessarily. It's not going to be an automatic. It's also about your individual skill, your ability to find a good deal, your ability to know how much leverage to use, if any, and that sort of thing. So I'm not really sure if real estate is going to make sense for any particular person to get into. That's going to be super specific to them and their risk tolerance and their skill set.
Okay. So, but you're not philosophically opposed to it.
Oh, of course not. No, I want to own real estate eventually. It's just not yet. Not yet for me personally. I can't speak to anybody else.
So inflation, though, like when we look at the price of real estate, I look back at my parents' house in 1963. It cost them about $56,000. Last time I saw that house sell, like 4 or 5 years ago, it sold for $1.4 million. You think that housing has run its course and it's going to also see a retracement like the Dow?
Yeah, I mean, we're in an interesting point now because so many dollars have been created that just about every asset class is at an all-time high. I mean, precious metals, real estate, stocks, bonds, pretty much everything is in a bull market. And so it can be confusing to say, like, is something going to continue to go up or not? I mean, it could be the case that real estate and the stock market goes up, but they just might not go up as much as something like gold or some other investments. So if you look at the 1970s, for example, the price of a median home doubled in that decade, which isn't bad. It's roughly 7% a year. The price of your house doubled, no problem with that. However, the price of gold went up 25x. So if you held gold instead of a house, you could buy 12 houses at the end of the decade instead of just sitting on the one house you had the whole time. So I would expect something like that to happen where the price of real estate could go up. And that could be a function of inflation. But on a real adjusted basis, if you account for the price of gold, I expect the price of gold to go up a lot. And so real estate might look like it went down in comparison.
Okay, so everything is relative here. What about what kills your thesis? What makes it so that gold, silver actually go down, although maybe not in real terms, but nominal terms? And and it turns out that there were better opportunities?
It's a great question. So there's a few things. The first one that comes to mind is it could be an issue of timing where this thesis could play out, but it could take 50 years before it finally reverts and I'm dead in a grave. And then my whole thesis was bunk. So it could just be an issue of timing, but it really feels like with all the geopolitical uncertainty, all the debt that's everywhere. I mean, 35 trillion in the United States. It really feels like it's happening now, and we're getting those nice technical moves in both gold and silver. So it feels like it's happening now, but it could be an issue of timing. It could be delayed. Also, it could be an issue of currency supply. Like we've seen N2 currency kind of rounding off, tapering off. That could continue if there's a huge credit contraction. If there's a deflation in the currency supply, that could cause asset prices to go down, including gold and silver, possibly real estate and the stock market as well. And again, everything's relative. So it's possible that more air comes out of gold and silver than out of the stock market. So those are kind of the two ways that thesis could be wrong, but they just seem like unlikely scenarios in my mind.
So like the deflationary depression, kind of like what we had in the 30s. I remember that my mother told me stories like if you had $100 bill, you couldn't go to a supermarket and cash it. You had to kind of do it privately, and you might get 95 cents on the dollar, meaning $100 bill would get you $90 to $95. Could that ever happen again?
Well, sure. Yeah, I guess something like that could happen. It would probably require a combination of factors in order for it to happen. Yeah, I guess I haven't thought through that scenario in particular, but I wouldn't rule it out, right? Basically, anything could happen if a certain combination of factors happens. So, yeah, that seems like it might be kind of extreme. There would be probably other things going on in the economy. There could be like power outages or something catastrophic that could create a scenario like that. But again, kind of a fringe case that I wouldn't bet on, but maybe just be prepared for.
Yeah, well, if the money supply crashes by even a few percent, we could be looking at serious deflation and major defaults. Finally, we should talk about the banking crisis, what's happening there, and how this all impacts on money. Is there any way to get out of the banking crisis now other than inflating?
That's a great question. That's $1 million question, $1 trillion question. Maybe
$64 trillion question.
Exactly. The numbers get bigger every day. So it's a great question. I don't know. I mean, when you're on a fiat monetary system like this, and in the absolute fundamentals is just print money and promise it into existence, you get into this vicious cycle where anytime you need money to pay off your debts, you're just printing more money and creating more debt. And so that's how we get to 35 trillion. And that's how these numbers really get out of control. So I think that the way out is they're probably going to inflate their way out. Otherwise, like there's outright default where you say, hey, we're just not paying it back. And that's World War III or worse. So I think it's going to be inflated away. So, I mean, that's kind of good news for any individual who has debt because you can pay that debt back with inflated dollars, obviously. So the real cost to you is much lower. But it's going to look pretty ugly for the whole banking sector and for the government as a whole.
Hey, I couldn't agree with you more. And finally, let's talk about the election, but I want to talk about Argentina, what's happening there. Argentina has been a basket case since I can remember. It's, multiple currency crashes, et cetera. Now it seems they've turned the corner. This guy Milei has literally cut everything in his power. We got an election here. Could that happen in the U.S.?
Well, it would be fun to watch. I'll tell you, if he, he just goes up, he's cutting all the budgets. I forget the Spanish word, but he's like, cut this.
Yeah. Great.
Yeah, that was fun to watch. Definitely. So yeah, he basically slashed like almost every government department, and it's looking like he's stabilizing the country. It's, he got a balanced budget in something like the first 11 weeks being in office, which is just incredible. So could something like that happen in the United States? Boy, I'd love to dream about that. I just feel like there's not a whole lot. We don't have a dictatorial system. We can't have a president that just comes in and does something like that. We have checks and balances like Congress and so forth. So I don't really see that happen.
Mostly checks and no balances.
Oh, that's a good one. I'm going to use that. But yeah, you're right. So I don't see that happening. I mean, it would be nice, but we just have too many politicians and too strong of an incentive to just keep going down the path we're on and try to, police the entire world and try to set policy for the entire world. And I just don't see something happening in the United States like what happened in Argentina.
Yeah, well, there's one means of doing it in the U.S., and that's called impoundment authority. There is actually a case against Nixon right around the time of Watergate and his imminent resignation, where he held back $400. Now, $400 million is a rounding error. Congress went to court, lost the case. He lost the case. It didn't really. It's never been fully tested. Let's put it that way. So if you impound a third of the U.S. budget, all right, and there's other little tricks to get rid of employees as well, maybe then, but sounds like a long shot to both of us.
Yeah, exactly. I don't really see that happening. I mean, it would be nice, but again, we've just gone so far down this path and we've put ourselves in a position of entitlement, not only in the government, but with so many of our citizens as well. It's really hard to take that away. And I really don't see any of our leadership having the discipline to do something like this, much less the courage. So I don't see it happening.
Well, a one-term president who has nothing to lose, never underestimate. Hey, we can always hope, right? Back to sound money. But inflation's just too easy. It's just too easy to print the money and let the chips fall where they may. Alan, we find you at goldsilver.com?
That's the place, goldsilver.com.
All right, excellent. Well, hey, you will be a regular on the show from this point on. If you got any question for Alan, myself, shoot me an email, kl@kerrylutz.com. Link to goldsilver.com is found in the show notes to this interview on financialsurvivalnetwork.com. While you're there, sign up for your free newsletter. Alan, a pleasure. We'll talk to you again real soon.
Hey, thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.